In today's video, I'm going to teach you how to read IC market insights. If this dashboard has ever looked overwhelming, don't worry. Once you know what each part means, it becomes a clear, actionable snapshot of the market. First, a quick overview. IC Markets Insights, sometimes called IC Insights, is a research section inside your account that pulls together analyst opinions, market sentiment, trending stocks and crypto, and price predictions. It's powered by TipRanks, which aggregates data from professional analysts, major news sources, and real trading activity. Think of it as a single place to scan what experts in the broader market are thinking right now. Start with analyst ratings: buy, hold, or sell. This is the headline view of expert opinion. Buy or bullish suggests analysts expect the price to rise. Hold or neutral signals uncertainty or a sideways move. Sell or bearish warns of potential downside. Treat these as informed views, not guarantees. A helpful check is consensus strength. For example, a large majority of buy ratings versus a few sells generally carries more weight than a split decision. Next, look at the price target. You'll often see something like a current price of 100 and a target of 120. That simply reflects where analysts think the price is likely heading. If the target is higher than today's price, that's a bullish bias. If it's lower, that leans bearish. Remember, targets are expectations based on current information, so they can change as new data arrives. Now, review news sentiment. This classifies recent headlines as bullish, bearish, or neutral using automated analysis. Positive earnings reports, strong guidance, or upbeat sector news tend to register bullish. Weak results, regulatory setbacks, or deteriorating economic indicators often show up as bearish. This helps you gauge the tone of coverage at a glance. Then check crowd wisdom, which reflects what other traders in the community are signaling through social media, trading activity, and sentiment. A bullish crowd can indicate hype and momentum, while a bearish crowd often means fear or caution. Be careful here. Crowds can be wrong, especially in highly hyped markets. So use this as context, not a standalone trigger. Explore trending stocks or assets to see what's most discussed, most rated, or most active. Trends can surface opportunities quickly and often come with higher volatility, which is useful for active trading. But remember, higher volatility also means higher risk. When signals clash, say analysts are bullish but news sentiment is bearish, that usually points to uncertainty. In that case, patience can be wise. And if analysts, news, and the crowd are all bearish, risk of a drop is elevated, so be cautious. Combine these pieces, and IC Markets Insights becomes a clear, practical guide to your next decision.